NERSA has rejected Eskom's tariff bid of a 16% annual increase on electricity tariffs, granting only half of what they requested, an 8% hike for the next 5 years. This comes after months of deliberation, approximately 200 written stakeholder comments and over 100 oral presentations made during the public hearings. We spoke to NERSA's director, Tembani Pukula, to find out how NERSA came to this figure.
It was a question of really looking at affordability and the current level of the tariffs right now, once we had limited the increase on your low-income consumers, those who are consuming below 350 kilowatt hours per month, to inflation or 5.6% increase. That is the same thing that we had considered in the way that we extracted efficiencies from Eskom's operations that they're shown in the application. Between now and 2018, the price increases for your customers consuming above 600 kilowatt hours in the home, I think it's the home light 60 amp, their increase would be 8% for the next 5 years. But those consuming below 350 kilowatt hours in the home light 20 amp, their increase will be inflation. So those are already at inflation. It is in MYPD4 that we're saying that we would want to bring all of the price increases towards inflation, because the capital build would have been concluded. Our function is to ensure that the tariffs that we set enable an efficient licensee to recover the full costs and give them a reasonable return. So if they are not efficient, even if they've incurred that cost, it doesn't mean that would enable them to recover it.
Now, the decision by NERSA to hike electricity tariffs of only 8% over the next 5 years will present difficulties, Eskom said today. Eskom spokesperson Hilary Joffe said they would be studying the decision and trying to understand the consequences and impact for Eskom. She said Eskom would try to keep the lights on. Eskom had initially applied for a 16% increase in electricity prices in each of the next 5 years. Well, joining me to discuss the implications for the sector and consumers as well as business is energy analyst Chris Yellen. He's the MD for EE Publishers. Chris, good evening. Thank you for joining us here on Beyond Markets. Now, either NERSA is going to have egg on its face or Eskom is going to have egg on its face. Put your head on a block. Who is it likely to be?
I think NERSA have done their homework very carefully. I don't believe that this is an irrational decision driven by political pressure from trade unions, NUMSA and COSATU, as they are trying to claim today. But I think their decision has been a rational one based on a clear understanding of the figures. They've been through Eskom's application, every single item, every line on their costing, and extracted efficiencies, corrected in things that are not correct, and reduced their return. For example, they've reduced Eskom's projected return by the end of the 5-year period from 8% previously to 4%. This is serious money, and this is extracting savings. Ultimately, Eskom needed something like R1 trillion of revenue, according to it, 1,000 billion rand. And NERSA has granted them 900 billion rand, effectively reducing their revenue by 100 billion rand over 5 years.
That's
and
a
Eskom
large
has
sum
to find
of
that
money. Yes,
Exactly.
that's a very large sum of money. Was Eskom trying to go for the Rolls-Royce with 16%?
I don't know exactly, but certainly they come from two different worlds. You know, they both have the same set of facts in front of them, NERSA and Eskom, yet one says they need 16%, and on the same set of facts, the other says they only need 8%.
Now let's look at what Eskom would take into consideration to get to 16%, the kinds of drivers. We know, of course, that electricity traditionally in South Africa has been very cheap, but that has changed. The demand for coal has increased. There's a whole lot of drivers that input the way in which one would forecast electricity and the security of supply. Take us through Eskom's rationale for coming to that 16%. Did they go for worst case scenario and did that kind of planning?
Well, they have to look at their projected costs over the next 5-year period. Costs such as primary energy cost. Coal is a very important part of the costing structure. Then you have operating costs. This includes staff costs, maintenance costs, etc. Finally, you have financial costs, interest, return, repayment of loans, etc. And they have to look at all of these things. And then finally, of course, their return on equity. So by looking at each one of these cost items and saying, no, your projection for primary energy cost was over, was over high, or your projection or requirement for return on equity was over high, reduce it from 8% to 4%, redo the sums, work out, what Eskom really needs over a 5-year period, and instead of it being 1,000 billion, NERSA reckons it's going to come out at 900 billion. And that is the difference between a 16% price increase per annum and an 8% price increase per annum.
Now, of course, you said earlier that contrary to what some people might believe, the decision was based on hard, cold calculation of facts and not as a result of political pressure. But one has to admit that the political climate does favor NERSA and empowers them in some senses to make this regulation. We've had an unusual unity between manufacturers and labor unions saying the 16% is way too high, could lead to incredible job losses and closures of business. We've had the ruling party speaking out against the 16%. And so, of course, it certainly didn't, play against NERSA to actually tell Eskom, 16% is just ridiculous.
Yes, I accept there have been a lot of pressures, but I don't think, I look at NERSA as an independent body, and I don't see that it is susceptible to all kinds of political pressure. It really does have to look at the hard facts. If it gets it wrong and just gives in to political pressure, they're playing with security of supply of the entire country. It can seriously damage the economy if they get it wrong. They have got to strike a balance between a monopoly who's pushing for prices that in its view of the world it needs, and NERSA's job is to extract every bit of fat out of that and actually drive improved efficiency from Eskom. And I think they've sent a strong message to Eskom about what it has to do in the next 5 years.
Chris, a final question, just the prospects and the outlook for the energy sector. We've seen the independent power producers coming in, a lot of interesting and exciting developments, given the fact that kind of NERSA slapped down Eskom in this way. Talk to us about the impact of this decision on the energy sector as a whole going forward.
Well, the energy sector in South Africa is facing some very unique problems. One can just look at, for example, the new build program. It's running about 2 years late at the moment. Medupi Power Station should come on stream by the end of this year, but there's been a 5 to 6 week strike and lockout. No construction is happening at the moment, and it's getting really close to the end of the year. And I think there's probably little doubt that there will be further time and cost overruns. But there are many, many other problems in the energy sector. I give you one example. We're busy, Eskom is busy now being required to enter into long-term price contracts to buy renewable energy at an average price of around about 2 Rand a kilowatt hour, significantly higher than what they what they can generate from coal. And they're locking themselves into long-term contracts. Well, there's natural gas discoveries in Mozambique that can change the game.